hello everyone. We're at a spillway about 45 minutes from my house, and we got to talk about the most important number for all cryptodom. And no, it's not RSI, it's not whether you're under or overbought, none of that stuff. The charts don't really matter at this point, because if Donald Trump tweets that he's tariffing again, we going down. So he doesn't listen to your technical analysis, so that stuff is really not all that useful for protection. What the most important number is the consumer confidence level, and that is actually on the University of Michigan survey, I believe. You can actually get that at CNBC at any time, and that just tells you like how confident are consumers of the economy right now. Because guess what? If they don't think the economy is good, they're not buying your bags. Crypto is an investment asset. It's a risk-on asset. Bitcoin has a little bit of the reserve thing going, but not all the other altcoins. They really don't. People see them as kind of like gambling coins. Whether you like, your coin or not, whether you think it's a meme coin or whether you think, oh, my project is real, that really doesn't matter. That's not how the rest of the market sees it as well. They see crypto as basically a huge speculative venture. So if they believe the economy is going down, they're not buying your garbage. It doesn't matter how much you want them to buy it, they're still not buying it. And that's why when Bitcoin dumps, everything else dumps. That's why when the stock market goes down now, everything else dumps. And the stock market is not going to recover as long as consumer confidence isn't high, because stocks like crypto are risk-on assets. And if people gauge the economy as being bad, they're going to be saving in bonds and money market. It doesn't actually matter too much what the interest rate is. Yes, a lower interest rate does help. But even if you have a really low interest rate and people think the economy is going to hell in a handbasket, they're not going to buy speculative assets. They're going to either hoard gold and silver, which is why they're going up, or they're going to go into T-bonds or things like that. Now, the T-bond stuff doesn't really make too much sense to me, because if the inflation is high, which isn't too high right now, you want to buy things that actually counteract the inflation, that actually would make you more on the inflation. But people like safety, they like security, so they're not actually going to do that. They're just going to hoard safe assets. And let's be honest, the inflation right now is like 2.8, 2.9. So if you can get like a 4% bond or like a 5% dividend, you can actually beat inflation. So that's the whole thing right now. That consumer confidence level is super, super important, because if it's low, they're not buying your bags. No way, no how. And let's be honest, crypto growing to this point, it actually depends on more new users coming in, and not like the gambling type, like basically mainstream users coming in. And mainstream users need to be confident in the economy for them to actually buy into speculative asset. They don't want to buy into a new speculative asset when they actually believe that inflation is going to go up to 5% next year, or they believe that companies and stock markets going down, because they're going to sell those speculative assets all the same. Bitcoin, they're going to sell some, and altcoins, they're going to sell more. So, that's the one key number that you need to actually keep track of, because if you don't keep track of that one key number, you're going to be hurting. It doesn't matter if you're looking at the RSI or anything else. That really doesn't matter all that much right now. Maybe for like short term, like swing trading perhaps, but if you're actually buying for more than 2 to 3 weeks, you need to look at the RSI number, not the RSI number, the consumer confidence level, before you can come back in. If the consumer confidence level goes up a couple of weeks in a row, then that's when you might actually want to buy in. As for where it is right now, it was decent when in January. It plummeted 15 points in February, and that was a 12-year low, and it just plummeted like 6 or 7 more points. It's 57 right now. It was 64 like before, and it was like something like 76 the month before that. So from January until now, it's basically hit rock bottom, and we all know that's because of the tariffs. So that's why we need the tariffs to go away. But that consumer confidence number is the all-importance number. And even if you're staking, it doesn't really matter, because you still need to sell your staking bags to actually use that money. See, staking isn't exactly like dividends, because you know why? Dividends are paid in cash. You can just go ahead and use that cash. If you get crypto dividends or the staking rewards, you still need to sell those staking rewards. And if no one is buying those staking rewards, you're still out of luck. And if the price of your coin keeps on dipping, then the value of your staking rewards is going down as well. It's a very, very simple concept. And that's one that people don't grasp. They're still looking at their charts, their triangle formations, their Bart Simpson Batman formation or whatever, but they're not looking at the overall status of the economy, which is affecting crypto more and more now. So keep track of that consumer confidence number, see if it goes up a couple of months in a row, and if it does, that's when you know when to buy. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you, and have a nice day.